Hi, everyone. Basil Chapman sitting in for Tom O'Brien. Tom's at the show this afternoon in Las Vegas. I called it the Money Show. It's a Traders Expo, I think, something like that. But I'm sitting in. And normally I do the 11 o'clock to noon show. It's called the Tiger Technicians Hour. And my service here at TFNN is the opening call. It's a daily newsletter, very comprehensive newsletter. And I give parameters for the different indices, et cetera, and the stocks we're looking at, what we're buying, what we're selling, et cetera. So let's go straight to the market. We've had a very interesting session today. If you're looking at my charts, you'll see the one on the left here is the daily. This is in the middle is the weekly. On the right here is the monthly chart. Same issue, whatever we're looking at. This is the 120. Sometimes I've got a full thing with a Chapman wave notation. The objective is to get you from a low bar, the most identifiable low bar, to successively higher peaks until you get to the fourth highest peak, which is peak D, A, B, C, D. Now, let's look at this. This is really interesting. See the black line here? This is the Dow. It closed up 217 points at 17,141. What was the last high? Was 17,000, right there, 17,172. So this is a very interesting move because what it's doing is it's using this black line. See this thick black line right here? That's called the 9-period exponential moving average. Held it perfectly yesterday and again today. Beautiful, a spectacular move, much bigger than yesterday's loss. And it's to the upside. The MACD, the moving average convergence divergence, is very strong. Stochastics at 92%. You know, in the 90s, the mid-90s is really positive. The weekly chart has gone to a leg B. The MACD has not yet crossed positive. You've got tomorrow to see if it can do that. But the stochastic from the low of the 24th of August has been rising, and that is a positive. Now, I've drawn in an arch formation and two trend lines which suggest an up channel. I'll get into that a little later. Suffice to say that we are going towards the top of this level right here. And in my daily newsletter, I always discuss, this is for tomorrow, I've already started working, typing in the comments. There are a lot more comments that go with this. But suffice to say, you see this coral line here, the 200-period exponential moving average of 17,282? Looks to me, with the MACD so strong and the stochastic so strong, that a leg E, and it might become an E/A. I won't get into that right now. Let's just say that if there is a close above 17,113, that's very positive, and then that 17,282 level comes in. Now look at this. You see this LS and RS? Down here, a little bit of an LS and RS. That's left side, right side price time match. And what I like to do is to use a plumb line of a bottom or a top to measure the number of bars from the left side, in this case the 18th of August at 17,568 to the midpoint of 16,933. That took 21 sessions. And now what we're doing is we're running up, and actually it comes in tomorrow, that the high of 17,568. Well, that's going to be tough to do in one session. I don't see a move from 17,141 up 400 and something points. But in the meantime, back at the range, what we are looking at is that this 200-period moving average could be hit. And now the support is at the right in the middle here, around about 17,070 to 17,050. All right, so now let's run the numbers, and I'll do that with these charts that we were looking at a moment ago. The Dow is up 217 to 17,141. The S&P, SPX.X, the S&P is in a leg, I'm calling this a leg E for now, and it's got the 200-period moving average right here at 2,031. And it's at 2023, up 29 points. Now, this is very interesting. The Dow is up 1.28%. That's 30 stocks. But the 500 stocks, not exactly 500, but the S&P 500 was up 1.49%. So there's a little bit more strength in the broader index at this particular point. And I'll explain in a moment what I'm looking at. The weekly chart has gone to this leg B. The MACD also has not crossed positive. Stochastics, okay, it's not great, it's okay. Look at the monthly chart. That candle that I call the Roman candle, we're watching that really closely. And essentially what will happen is if there is a move down to the, at any point in the next 3-4 weeks, to the 1921, 100 S&P points down. It's like 1,000 points. I'm not sure what's going to do that. But if there is, then you've got to be real careful, because there's a good chance you're going to take out the low in the S&P that was made in the 24th of 1867. So we're watching this real closely. Meantime, the technicals are very poor. 120-minute chart says probably a leg E, but it might recycle. Let's go to the QQQ. Now, the QQQ is the NDX 100. It's in leg C. It's held the 9-period exponential moving average. The MACD is quite strong. Stochastic's holding in the 91% area, and I had a call earlier today in one of our shows where we were discussing it, and I said the 9-period moving average is good, and I suspect we're going to try to worm our way up to the top. I'm not sure we're going to take out the 108.73 level for leg D, but actually the way it's looking right now, there's a good chance that we're going to, because we're at 107.66. So, so far that's good. We have not made a leg B in the weekly chart above 108.73. So we've got support in the low 105s in the Qs, and the resistance comes in about 107.90 to 108.20. If you take that out, we probably will go a new recovery high. About 108.73. Now, this is going to be very interesting. Just real quickly, IWM, we don't want to run out of time here. We've made a peak B. The IWM is one of the weaker looking indexes, but it had a very good day today, and it's really starting to improve with today's move, but it needs to clear 116.30 and it closed at 115.60, up 2.73. It was up 2.42%. That's double the Dow and almost double the S&P percentage-wise. That is a good move. The weekly chart, the 120 chart hasn't taken out that high of 116.30. We'll watch that closely tomorrow. Options expiration should be a very interesting session. Look at gold. Now, gold, which I always refer to as a currency of fear, except when there's a general commodity rise, and there isn't. And at this particular point, gold has done very well. The gold contract itself is in leg C, but what's interesting is the GLD, just trading down 53 cents at 113.28, is in leg D. In the Chapman wave methodology, D's, you can see the little D over here. D is where you look, the fourth highest peak, because that's where you can have a pullback. It doesn't say a major sell-off, but a pullback certainly. The weekly chart has improved a lot technically. It's that monthly chart that I'm watching really closely. This is a leg A, but we've had A's that have failed before. So it's really important for the GLD to treat this 200-period moving average that had gapped over at 112.18. Got to treat it as support. I don't mind if it pulls back under just a tad, but it can't be there for more than 3 sessions. It's got to really bounce right back above 112.20. Look at the dollar. And here we go to a break. We've got a break coming up. As we go to the break, look at the dollar. It pulled right back underneath support. It's trying to get back again. So the dollar might bounce a little bit here as gold pulls back. Going to be very interesting. Basil Chapman sitting in for the one and only Tom O'Brien. I'll be back straight after these messages. Dow was up 217, S&P up 29.